Alright, what's poppin' YouTube? Welcome to another video, and today I'm going to be talking about, in my opinion, what the number one reason why traders fail is, why they postpone their success, and why we just fail to sometimes see progress within our trading. You might feel like you take 10 steps forward, just take 20 back. I'm going to talk about it today. I think one of the number one reasons is just the ability to identify market conditions and understand how to mitigate your risk in relation to that. Today, I feel like is a perfect day to talk about it because I think today is a perfect example of it. Price action was not the best today. Price action was very inefficient, and it wasn't really what I expected. And I think for me, my mistake was going into the day, I had a expectation to take a trade. I had the expectation to make money today because I usually do based off of my statistics. NFP Friday is my most profitable day, so I came in today with a mindset where I was set on making money, where I was set on taking a good trade, finding a good setup, and it never presented itself to me today, which resulted in me taking two losses, resulted in me losing money across my accounts. And I'm going to talk about some ways you can kind of go about determining whether or not price action is going to be good or not, determine on whether you can have a looser stop loss because price action might be a little bit choppy, or whether or not you should have a tighter stop loss for when price is moving efficiently, when price is doing what it's supposed to do. Now today, I would say one of the biggest red flags, for me, which I failed to kind of identify was, the lack of volume from market open. That is not something that I usually see. That's not something that I like to see. Usually, once 9:30 hits, where's the 9:30 candle at? Once 9:30 hits, you can see right here. Once 9:30 usually hits, you get an ample amount of volume coming into the market. Usually, price will increase volatility severely. You will see the move that you want to see, and you will usually 9 times out of 10 price will tell you what the direction is for the day within the first 5 to 10 minutes of market open. Now today we didn't have that. Candles are printing very slowly still. We look like nothing happened, looked like the market didn't even open, which I think was the first red flag for me. And I failed to apply that. I failed to analyze and apply that to my strategy going forward. I was still looking to trade like any other day, because usually I do like to have tighter stop losses, especially because I take my trades within the macro time. So price is usually more efficient within those times. And so I see market open was slow. Today I did want to be more bearish based off the higher time frame SMT. NFP Friday, we had data lows resting beneath us. I don't even know what this is, but we had data lows resting beneath us. This was my overall target. Oh, I'm tripping. This is my overall target. So today, I had my mind set on taking a trade to these data lows. I wasn't being reactive. I wasn't being, the right trader that I should have been today. I failed to recognize it. Also, another way to identify whether or not conditions will be good is just based off the overnight session, based on pre-market, and based on just previous sessions the day before, news events, things like that. If we have a lot of volume, or if price action looks very good pre-market, and in the overnight session, 9 times out of 10, New York AM, going into market open won't be as efficient, won't be as volatile. Setups won't really work as much. Now today, I wouldn't even say that we had the best action pre-market or overnight, but I think market open was one of the biggest telltale giveaways. And then another thing, once you start seeing, usual setups fail, or price isn't moving as efficient as it should, like, look at this. This looks like barcodes. Usually for me, whenever I see things like this where price is just, it looks like it doesn't know what it wants to do, we are respecting bullish and bearish. That's, to me, is usually a sign to mitigate my risk, lower the size going into the day, have a looser stop loss, be more patient with the setups that I take and things like that, because you never know when price is going to actually move. You're just going off of what it tells you. And if it's telling you that is hesitant or it doesn't really know, you shouldn't take no trades either, or you should at least lower your size. Now, my mistake today. Where was the trade I took? I took a short right here, off this change in the state. Now, my mistake today, because as you can see, you know, my bias was correct. I wanted to see this low first. My bias was correct. However, what I failed to recognize was that price was not moving as efficiently as it should have. Now, when I took this trade, macro was opening up 952. To me, we're about to speed up. That's my anticipation. I went into the day with expectations and anticipation, which is the complete opposite of what you want to do when you're trading. You do not want to have any type of expectations. You want to be solely reactive. And for me, being, you know, creating these expectations in my head based off of, you know, prior analysis, which isn't the most horrible thing, but at the same time, we do have to be reactive and we have to go into every day with a clean slate. Every day, like, the scoreboard is zero. Every day, like, it's a new day. You never know what can happen. These markets are completely unpredictable. So I went in with the expectation that we would get a fast and effective and efficient move to these 930 lows, and then, you know, continuing to push to the data lows. This is what I wanted to see overall. However, price chopped up. I had a tight stop. Price chopped up and literally wicked me out. I got wicked out. So my entry was on this candle right here. I got wicked out. Price ended up leading to my target. Now, another thing though too, even if I didn't get wicked out, I still would have, because I know myself, I still would have 9 times out of 10 made another mistake right here. Because let's just say my stop was here. We got this initial 1 minute fair value gap. You see prices initially respecting it. Right here, I would have pyramided. Knowing myself, I would have pyramided, moved my stop to the high of this 1 minute right here. So say my fill gets moved to here. My new stop is right here. I would have been stopped regardless. And then I would have probably tried to re-enter after we, you know, close above and then close back below. And I would have just kept getting chopped up, knowing my old self, knowing how I used to think, how I would try to trade. I would try to revenge trade, make my money back. And this is where a lot of people make mistakes at, because you'll try to make your money back all because, oh yeah, I think price should stop under me. But you're not realizing that, yo, we're respecting bullish, and then, no, we're respecting bearish, then we disrespect it. Respect bullish, disrespect it. Like, we're not trusting, we're not holding any type of PDRAs. Prices not moving as effective as effective as it should. Price is being very inefficient. Price is hesitant. That's the times where you don't want to trade at. You don't want to touch the market in those times. And I think that's where a lot of people make their mistakes at. That's where a lot of people go on to lose their accounts at on days like this, because 9 times out of 10, y'all know how to trade. Y'all know what y'all look for. Y'all know what to do. But it's these type of days that are, you know, solely very unpredictable. And these are the days that people see the most struggle. People have the most issues just because you never know. And I think a way to combat it is just listen to the signs. Be reactive to the market. Don't have any anticipation. Take what the market gives you. If you see that, all right, we're not moving as efficient. Like, look, all of these candles right here from 945 to 953 are just sitting next to each other. We're not having any type of movement. We're just literally, looks like a barcode up here. That's a sign. Market open very slowly. Not much, you know, just candles are just printing next to each other. There's no real movement within the market. There's not a lot of volume within the market. That's another sign. Listen to the signs that the market gives you. Now, for me, yes, I had the correct bias, but my stop was too tight. On days like this, you should look to have a looser stop loss, lower your risk, you know, aim for the lower risk to reward trades, because at the end of the day, it's better to be safe than sorry. You know, I always say it's better to make a little bit of money than lose a lot of money. I'll take that any day of the week. And that's just been something that I've been trying to work on with myself as well. Just repeat it, just to get that through my head, just to understand. I think it can help you guys as well. Being able to identify these days is hard. I still struggle with this sometimes. Now, thankfully, I did lower my size today. I didn't lose too much money today. So, you know, I'm still green on the week. But my old self, you know, prior to the knowledge that I have now, if this was me a few months ago, I would guaranteed I would have lost my account today, because I would have continued to try to trade within this chop. I would have continued to try to, make the money back that I lost. I would, double my size on this re-entry right here. Once we, close back beneath the inverse, I would double my size, have a super tight stop, try to make everything back with a tighter risk to reward. And I would just keep getting, I would keep losing. And that's what a lot of people do. I know I'm not the only one. I know there's people that do that as well. It's just how we work as humans. We're sore losers, especially when it comes to trading. When you start out, like, you don't like to lose. And I think you have to just be okay with that, be able to walk away from the market. Like, I took 2 losses today, walked away, still green on the week, still happy, still was able to take a withdrawal today. And that was that. We wait for next week, we journal, we figure out what we did right, what we did wrong to move forward. And that's what you have to do. You have to be reactive. You have to go into the market with no anticipation. I was expecting to have a good trade today. I was. That's my fault. I expected price to be efficient. I expected for price to, move in my direction very fast. These are all things I can control, especially on a day like this when you're already up on the week. There's no reason to try to. That's another thing too. If I'm already green on the week, a very good amount of money that I'm good, I'm happy with, there's no reason I should go in the last day of the week even looking to try to hit any home runs or trying to make a bunch of money or even trying to, just double my. It's not like I was trying to do that, but I was taking today with my regular size. I think another thing too, I shouldn't have done that. If I'm already up on the week, I should have lowered my risk today. I shouldn't have even lost what I lost just off of that alone. Like, if you're already up on the week, don't risk losing more of that just because you want to make more money on the last day of the week. Statistically, Fridays are, less efficient. They are usually the worst days of the week to trade, Mondays and Fridays. However, for me, since I'm expecting, NFP Friday, I usually make money. I'm going to go in here trying to hit a home run. That's where I messed up at. That was where I made my mistake at. And that's where I think a lot of people can learn from my mistake from. Just don't expect certain things. Be reactive. Be able to mitigate your risk. And be smart. Don't be impatient. Stay patient. Let the market tell you what it's going to do. And if it's failing to tell you, if it looks like it's talking in sign language, then just walk away. Simple as that. Just the ability to walk away is one of the hardest things, especially as a new trader. So I'm going to keep this video short and sweet. Just wanted to break that down to y'all today. Something that I went through today and I feel like it can help y'all out. But yeah, hope y'all learned something. Hope y'all enjoy. Please like, comment, and subscribe. Let me know any feedback, whatever y'all got to say. I read all the comments. I appreciate y'all for supporting, for watching this, for liking, for commenting. I'm gonna catch y'all in the next one. Peace out.